Let us see the next question. A firm considers a project involving immediate cash outflow of 30,000 rupees. Immediate cash outflow is always in the current part, that is say the price system, okay, and has forecasted the cash flows in, highlight the portion, real terms. Real terms means in the current purchasing power term. In terms of the current purchasing power, as follows: end of year 1 and end of year 2 real term cash flows have been given. Discounting rate is 25% for the nominal cash flows. So we have been provided with the nominal cost of capital. Inflation rate is 15%. State whether the project is acceptable using, highlight the portion, NPV method. Show your calculation in real terms, in nominal terms, and the discounting factor information is given. I request all of you to go through the question and you just tell me in the chat box. I don't want answer. You just tell me in the chat box how to make the calculation of the answer in first question. Students are requested to pay attention. See, in the first question, what we have to do, you're required to compute the cash, that is NPV calculation in real term. Real term. So there are two things which are required. Real cash flows, oh, I'm lucky. It is given to us in the question. And second thing, I require the real discounting rate, real cost of capital. However, I have been provided with the nominal cost of capital. Do not write anything, let me explain you. No problem. What we can do, dear students, we can make the computation of real cost of capital. How to compute the real cost of capital? By using the simple formula. So real cost of capital is 1 plus nominal divided by 1 plus inflation. What is the nominal cost of capital? Nominal cost of capital has already been found by us. That is given to us in the question. It is 25%. Inflation rate is also given to us in the question. It is 15%. So as far as the real cost of capital is concerned, it is 8.6957%. 8.6957%. That is the way the real cost of capital is calculated. Now, do not write anything, let me explain you. These real cash flows will be discounted with the real cost of capital. 6957. 1 divided by 1.086957. The first year discounting rate is 0.92. Second year discounting rate is 0.8464. So 24,000 into 0.92. That is 22,080. 24,500 into 0.8464. That is 20,736.8. So total of both of them is 42,816.8. The amount of the investment that say we are making is 30,000. So from present value of the cash inflow, investment is deducted. To find NPV, it is 12,816.8. This is the way we can make the NPV calculation. And since NPV is positive, we advise the company that say you should accept the project. So coming back to the point, that when the question says that say you are required to apply real cash flow approach, then in that case you need to have the real cash flow, you need to have the real cost of capital, real cash flows discounted at the real cost of capital to find NPV. Again, I just want you to tell me in the chat box how to do second part of the question. I don't want answer. Now friends, in case of the nominal cash flow approach, what we will do, again we already have understood it. Students are requested to pay attention. Nominal cash flows is equal to real cash flows into 1 plus inflation rate raised to n number of years. That is the way the nominal cash flow can be calculated. Sir, why do we compute the nominal cash flow? Because the question says that so you are required to adopt the nominal cash flow approach. So real cash flow will be converted into nominal term. So we understand 24,000 is for year 1 into 1.15 raised to 1. So it is 27,600. Then it is 24,500 into 1.15 raised to 2. So it is 32,401.25. It will be discounted at 25%. Sir, why directly 25%? Because 25% is the nominal cost of capital. We'll compute the present value. 27,600 into 0.8. That is 22,080. 32,401.25 into 0.64. 20,736.8 plus 22,080. So it is 42,816.8. Amount of investment is 30,000 and NPV is 12,816.8. So this is the way we are required to make the calculation of NPV. And of course, dear students, you can understand that say in case of the real cash flow approach and in case of the nominal cash flow approach, you are going to get the same answer. This is what we understand is the approach that we have to adopt. I just repeat that. So in case of the nominal cash flow approach, what will you do? The real cash flow will be converted into nominal term and then it is discounted with the nominal cost of capital. Now, one more question to all of you. Listen carefully my question. A firm considers a project involving the immediate cash outflow of 30,000 and forecasted the cash flows in the real terms, that is in terms of the current purchasing power as under. Discounting factor is 25% in nominal term. So for nominal cash flow, inflation rate is 15%. State whether the project is acceptable using NPV method. Now let us say that this is not provided. This is not provided. I want you to write in the chat box. Then in that case, how we can make the calculation of the answer of NPV. I want you to write in the chat box. Dear students, if at all the question is silent in this kind of situation about by which method NPV is supposed to be calculated, then in that case as a student you have a choice to do answer by either of the method, because either of the method is going to lead to same answer. So as a student you have to decide that say you will do answer by which one of these two methods. Adopting either of the approach is going to lead you to the same answer and of course the same conclusion. So over here we understand that say if nothing is specified, you have to take a decision. Let's say how you will make the calculation of answer. For that say you have a choice. Just you have to keep in your mind that if at all you are adopting the real cash flow approach, then in that case cash flows will be discounted with the real cost of capital. And if at all you are adopting the nominal cash flow approach, then you have to discount the cash flow with the nominal cost of capital. So first of all, let us calculate the answer. And then let us say write a note. Heading right down. NPV calculation using real cash flow approach. In that write down, first point, in this case we need to discount real cash flows with real cost of capital. Second point, in this question, information about real cash flows have already been given. Full stop. Further write down, it will be discounted at real cost of capital. Full stop. Write down working note number 1, calculation of real cost of capital. In that write down 1 plus n is equal to 1 plus r into 1 plus inflation rate. What is the nominal cost of capital, friends? Nominal cost of capital is 25%. What is real cost of capital? That is to be calculated. And what is inflation rate? Inflation rate is 15%. So this information is provided to us. So we have to compute the real cost of capital as balancing figure. So 1 plus r is equal to 1.25 divided by 1.15. So r is equal to 1.25 divided by 1.15. So answer is 1.08695. So let me take 87 minus 1, 0.087, that is 8.7%. This is the way the answer of the first working can be calculated, that is the real cost of capital. Now real cash flows will be discounted with the real cost of capital for finding NPV. Working note number 2, calculation of NPV based on real cash flow approach. In that, end of year 1, end of year 2, cash flow information is given. First year end it is 24,000. Second year end it is 24,500. Discounting at the rate of 8.7%. And then present value. So use a calculator. 1 divided by 1.087. First year factor is 92 paise. Second year factor is 84.63 paise. 24,000 into 0.92, that is 22,080. Second year 24,500 into 0.8463, 20,734.35. So present value of the cash inflow will be calculated. 42,814.35. Amount of investment is 30,000. Difference of both of them is NPV 12,814.35. I request all of you to write down answer NPV based on the real cash flow approach. Now heading right down nominal cash flow approach. Now let us understand how to do answer in case of nominal cash flow approach. I request you to write down answer along with me. First point, over here we have to find nominal slash inflation adjusted cash flows, and it will be discounted at nominal cost of capital. First step. Second point, in this question information is given about real cash flow, comma, it will be converted into nominal value, and it will be discounted at nominal cost of capital. This is what we understand. Now let an answer. Calculation of NPV, because in the table only will compute the nominal cash flow, that is the reason. First year end, second year end, nominal cash flows, which will be calculated as real cash flow into 1 plus inflation rate. It is 24,000 into 1.15 raised to 1. Second year it is 24,500 into 1.15 raised to 2. So 27,600. 32,401.5. I'm sorry, 401.25. It will be discounted at 25%. First year factor is 80 paise. Second year factor is 64 paise. Then present value. 27,600 into 0.8. 22,080. 32,401.25 into 0.64, 20,736.80 plus 22,080. So present value of cash inflow is 42,816.8. Amount of investment is 30,000. NPV is 12,816.8. That is the way the NPV is calculated. Once again, NPV is say going to be of course the same in either of the case. There will be some difference due to the approximation. Otherwise, every paise will match. So, read on further. Decision: accept the project, comma, because NPV is positive. That is what we understand. So this is the way the NPV is calculated, and since NPV is positive, so we understand that the project should be accepted. This is the point at which the answer comes to an end. Of course, dear students, you can understand that these things are not required to be answered by you, mentioned by you in examination. This is only for your understanding purpose. Okay. Now I am dictating a general note to you. So with respect to the decision making, whenever the inflation information is given. Okay. Then on first point, whenever information is given about inflation, comma, we can calculate NPV by one of the following two methods. In the write down: A, nominal cash flow approach; B, real cash flow approach. Second point, if nothing is specified about which method is to be adopted, comma, we can adopt any of the above methods, comma, it will have same conclusion, full stop, same NPV. In that write down further, if any of the method is specified, comma, we have to follow that method precisely. That is what we understand. Third point, we always have to take care nominal cash flows, real cash flows. Discounted with nominal cost of capital, real cost of capital. That is the way. So we are supposed to have the discounting of the nominal cash flows with the nominal cost of capital and real cash flows with real cost of capital. This is very important. So summary of the entire answer, a very important question, very basic question, but important question in my opinion. Over here, the question is providing a set of the information in which the real cash flows are given, nominal cost of capital is given, inflation rate is given. And we are required to make the calculation of the NPV using the real cash flow approach and nominal cash flow approach. In case of real cash flow approach, what we will do, dear students, real cash flows will be discounted with the real cost of capital. So nominal cost of capital is converted into real cost of capital and then we discount it with the real cost of capital. That is the way the NPV is formed. In case of the nominal cash flow approach, real cash flows are converted into nominal term and then we discount it with the nominal cost of capital. This is the way the NPV is formed. Then I have dictated a note to you that say whenever the inflation information is there, you have to keep in your mind that say there are two methods by which you can do answer. Nominal, real. If nothing is specified, you can do answer by either of the method. It will give the same conclusion, same NPV. If any clarification is made, you have to follow that specific method only. You cannot have your own method in that case. Whatever the method that say you adopt, in that say you have to be very clear in your approach. If at all you are following the nominal cash flow approach, then nominal cash flows will be discounted with the nominal rate. And if at all you are following the real cash flow approach, real cash flows will be discounted with the real cost of capital. That is the way we are required to make the calculation of answer.